Is it too late to buy Tesla stock? Despite recent struggles, Tesla's bold ventures beyond EVs hint that its most transformative and profitable days are yet to come. Since hitting a peak in 2021, Tesla's 0.23%, has struggled to build much, if any, momentum. Once trading at more than $400 per share, the stock has been beaten up for the last 3 years and currently sits at around $185. While those who invested before 2021 are likely sitting on comfortable gains, those who've invested more recently may not be so fortunate. Perhaps Tesla's best days have already passed, begging the question, is it too late to invest in Tesla? Explaining Tesla's fall. Tesla's stock dip can largely be attributed to dwindling gross profit margins. At its peak, Tesla's margins were above 30%, easily the best in the entire auto industry. Today, those margins have receded to 17%, which, although still near the top, now face a number of pressures. The reason for this decline is varied but can be boiled down to a reduction in consumer demand for electric vehicles, EVs. Higher interest rates have dissuaded would-be buyers due to the increased costs of financing a vehicle. In an attempt to stimulate demand, Tesla decided to cut prices in 2023. This, combined with higher costs across supply chains and labor markets, caused margins to tumble. However, interest rates will fall eventually, and demand for EVs are likely to rebound as these factors are typically cyclical. Current trends suggest that rates may start to finally decrease by year's end. Naturally, as borrowing becomes cheaper, consumer demand for EVs should rebound. Furthermore, Tesla stands to benefit from the overall trend in EV adoption around the world. Governments are implementing stricter emissions regulations and offering incentives to encourage EV purchases, creating a supportive environment for Tesla's long-term growth. Plus, the company is expanding internationally with construction of a factory in Mexico underway and plans to enter India and Thailand in the coming years. A new Tesla takes shape. Tesla is striving to become more than just an EV company. One of its key efforts right now is building out autonomous vehicles and eventually launching a robotaxi business. Tesla's self-driving technology has made significant strides, and the company is preparing for a worldwide demo of its robotaxi on August 8. In addition to autonomous vehicles, Tesla is also in the midst of getting its humanoid robot, Optimus, ready for market launch, which is anticipated to happen in 2025. While these endeavors are not yet ready for widespread commercial release, Tesla has made notable progress. Optimus is already being used in Tesla factories, showcasing its potential to enhance efficiency and reduce labor costs across all kinds of industries. Taking the optimistic route. Critics will point out that Tesla and deadlines don't always mix well. But it is difficult to contend with its ability to eventually follow through. If Tesla can replicate similar levels of success in its robot Axis and Optimus as it has with its EVs, it could transform the company and maybe even society for the better. While it is difficult to measure the true monetary impact that these two innovations will have simply because no such market exists for these types of products, some estimates put the total revenue of robot Axis at $700 billion a year and Optimus at around $1 trillion. Combined, and if accurate, that means the two would more than triple Tesla's current revenue. At the risk of being optimistic, I believe Tesla's best days remain ahead and that it isn't too late to invest in one of the most transformative companies of the future. Tesla's ability to innovate and push the boundaries of technology has been a key driver of its success thus far. If it can continue to lead in the EV market while successfully expanding into new areas like autonomous vehicles and robotics, the company could soar to even greater heights. Monster growth potential: 10 stocks we like better than Tesla. Before you buy stock in Tesla, consider this. The Motley Fool Stock Advisor analyst team just identified what they believe are the 10 best stocks for investors to buy now, and Tesla wasn't one of them. The 10 stocks that made the cut could produce monster returns in the coming years. Consider when Nvidia made this list on April 15, 2005, if you invested $1,000 at the time of our recommendation, you'd have $757,001 *.